Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi, and welcome back to the Conscious Day Trader. If you're new here, I'm an ICT 2022 mentorship full-time day trader, and I share my trades literally every single day from 2023 has been posted on this channel. You can see my entries, my exits, how I manage the trade. Yes, we don't trade live just because I don't want to become a person who provides signals. I think there's not a lot of learning in that by copying someone's trades. However, me showing you my journey in the trades and how it can actually be possible to trade the ICT in the Forex market. I trade mainly the pound dollar and the euro dollar. That I can do, and because we are in Bali and the time zone is different, I trade the London Open. I finish my trades around 4-5 o'clock, so I post the day after. In this case, 2 days after, for Friday's trade on the pound dollar, which we were long. And if we jump onto MT5, we can see that is the profits, $422.5. And you'll see we had these trades. If you're new and you're not seeing these trades and wondering why I see closing these trades, these are repositioning of the trades, and it's a way that I manage my trades. I close bad trades and reposition them. The main bulk of the trades are normally 2 and maximum 3 trades. So these are the bulk of the trades here, as you can see. So what we're going to do is jump onto TradingView, and we're going to jump straight into the dollar index. Why the dollar index? I keep saying it every day, and hopefully repetition sticks in, and everyone start looking at the dollar index as well, because there's so much information that you can take just from the dollar that you can use in your trading for the pound dollar. Remember, you're trading the pair on the stronger currency that is moving. Every single pair is the dollar. So what we want to do is see what conditions are there, and we're going to start always from the daily. You might have seen that blue box with the gap. We're going to go into this, and we broke this this on Thursday, and we did discuss about the 4-hour fair value gap. So if we go on the 4-hour fair value gap, we did discuss that the price can come all the way up. We identified this area. We definitely identified this area, which got taken out to the end of the session, all the way to the top. Now, what is this indicating? This is indicating a strong dollar, right? So we had a weak dollar here on Friday the 6th of January, pushed all the way down, came down into this green zone, which is my sell side liquidity, got taken out, took out these stops from back here, and now pushed all the way up, filled in this area here, this fair value on the lower time frames, this one for sure, touch base, double top, dipped into the sell side liquidity, took out the stops that are from this move here, and then pushed up, came down and pushed up. Now, what do you want to be doing if you see this? You want to be obviously selling the pound dollar, because from this moment here on the 1st of February, the dollar has been showing signs of strength, coming back into what areas? This daily fair value gap and these 2 fair value gaps on the 4-hour. So that's our bigger picture. However, you might ask, why were you then buying the pound dollar when you can identify that the dollar is strong? That would indicate that the pound should be weak and selling. In every single day, you will have buyers and sellers. You want to find because in reality, I would class myself towards, is it scalping? I wouldn't say scalping for 30 pips is scalping. 30 pips, I would still call it a day trader. Scalpers normally look for 2 to 3 pips. I got a question on what do you trade? Are you a scalper or are you a day trader? I would say I'm a day trader. I try not to carry on trades on the next day. I try to close, especially on a Friday. I want to close. I don't want to be waiting for the open on Monday. So that being said, what I do, I look for my bias on the day. So I wake up, In this case, it's in the afternoon in Bali, around 3 o'clock or 2 o'clock, I believe. That is when I start looking at the market, which will be 6 a.m. in the UK, and I look to identify buyers. So you might see all this and get confused, but what we're going to do is break it down in detail on how I found my trade. And please, if you like this content, make sure you like it and subscribe to the channel, because I do this on a daily basis, and you might take something that you can use in your trading. I'm not a teacher, I'm just sharing my my journey of trading and how I've used ICT to become profitable and come to Bali and live here. Because we can do this from anywhere in the world. And these are the results. Last week, obviously, we were flying here, so I missed those 3 days, but still a good return on the week, $825, 4,580 for the month. This is a trading sync. I know I'm going to get some questions about this. It's really cool. What you can do is I will drop a link in the information. I think it gives you 40% discount. It is quite expensive. Do you need this? No. But if you have some money that you want to spend, I like it because you just press one button on the MT5, download the report, and it's within seconds you get all your data in here. And you can do other stuff on here, which is, this is the dashboard, for instance. It will show you like all the wins and accumulated wins, what has been your best times and worst times, and so on. And it gives you a nice review of the calendar, which I really like, and you can see what you've done. We are currently running on green days. I know it's surreal, from like a month and a half now. And that is down, I believe, strongly believe, to my patience and getting good trades, good quality trades, and also being to manage out of bad trades with profit. And that's why you'll see some days that weren't as high profitable as these, like 800 in a day or 1,500 in a day. You might see 22 trades, but like I've said, these are only 2 to 3 trades. Everything else is repositioning bad trades. In an ideal world where I want to be with my trading, and this is, you can see some learning curves, I want to be around this area here. What I'm starting to see, I'm quite happy, is that the repositioning are decreasing, which means that I'm getting in more patiently. I'm waiting for the market to come to the conditions that I'm looking for, and then I only need to get a better price 2 or 3 times and let it run. I'm currently averaging a little bit lower in this week, around $410 in the day. Considering we've just moved to Bali, getting used to the environment and all the surroundings and having a baby and dealing with all that, I think that is still good trading for me. I want to be roughly trading around $500 a day, and I am going to increase that as my account from the 5%ers. What they do, every 5% they increase your account. This is a funded account of 150,000. Sitting now at 161,000, I believe. So on the next target, they're going to give me 175, and that's going to increase up to 4 million. So there's no rush for me to increase my lot sizes, because what I want to do is I do it safely. And that's a lot of problems people find, is that they jump the lot size too quickly, and the account can't take it, and they blow up the account. So I think I'm going to be trading one lot split out into 3 for quite a bit of time until we can get a bigger account. And then also I've got a limit on 10 lot size exposure. So if something goes really bad, I would only be able to use those 10 lots. Yes, that sounds ridiculous and big, because that's £100 per pip. I wouldn't use that. I'm saying like a safety net if something happened dramatically and I needed to get out of trades. By increasing my lot, let's say I did 2 lots, I would only have 5 positions that I could open at any time. Not that I would, but as safety, I would like to have 10 to 15 positions that I can manage a trade. and get out of. Now, don't get confused that I will be opening 15 positions, 15 lots. No, I'm opening 3. But what I might do sometimes if I'm in a really bad position, open a 3rd one and kill the worst one and then manage my way out. And that's something that is personally to me. And I haven't yet shared it in detail on this channel. I want to keep something for myself. I think I'm sharing enough. So let's jump onto the trade. And what we're going to do is, like everything, we're going to start with the daily high and daily low. So this green candle here was Thursday, which we traded again long. And even if we discussed and said that things are showing, so that was a long day on the dollar index, and I made money long on the pound dollar. And we broke that down in the previous video. You can go and watch it. We posted that on Friday. Today, what we're going to do is we're going to take this previous daily high, and this is going to be on there. So we're going to put it on Thursday and put this on the daily low of that wick. What else do we want to have on the daily is this equilibrium here that is out of whack because it's taken from the previous day. We're going to get the Fibonacci level, put it on that line and on the high, and that would give me the 50%, and I'm going to drag my equilibrium on there. So then what we've done now is we can see we've got the equilibrium line, we've got the high of the day and the high of the previous day on Thursday 16th. Remember, we traded on the 17th. And what we're going to do is break down onto the 15 minute. As soon as I opened this graph, I knew I was going to be buying the pound. Why? What could I see? Well, it's a bit evident there because I've drawn it in blue. We've just hit that 4-hour fair value gap on the daily. Okay, and the US dollar has been strong for a while here. Pushed up all the way and came all the way up here. Okay, so now this is 7 on Friday morning. And what we wanted to see, I personally wanted to see the price going even higher. Why? Because we're in the 4-hour fair value gap. We're also above previous daily high. What does that make the dollar? It means that from the previous day, we are trading at a premium price. It can't go up forever. There's going to be some profit taking. There's going to be some repositioning at a bigger level, institutional traders. And we also had something really significant. And that really significant thing is this fair value gap here. The price gapped up, okay, from the open of the day. So this tends to come and fill. Now, how far up can it go before it fills that? Let's see how big that fair value gap is. 685 pips in one session. So London session previously on the London kill zone did 27 pips, 19 pips, and so on. What's the chances of that filling the whole fair value gap? Pretty slim. So now we've sort of analyzed the chart, and we know we're in the 4-hour fair value gap on the dollar index. Yes, we're not trading the dollar index, we're just creating bias for the pound. What we're seeing is the price come higher. It broke above the Tokyo sessions of the kill zone, and now it's coming in of the close of the Tokyo session and creating higher highs and higher lows. So that is telling me, is giving me good indication that I want to find a setup to short the dollar index, which means I will be buying the pound dollar. So what am I expecting to see? Ghost feed, this like sort of pushing even higher. Can't remember where it went, doing more something like that, but eventually coming down to this area. Okay, so even if that didn't happen, something, let's say that the price came straight down. This is what the area that I want the dollar to come. Worst case scenario, and we're completely wrong, we get into a trending day and that just keeps on going up. Okay, and that's where your management needs to come in. Have you got enough money to manage a 600 pip if you have to sit over the weekend and come back on Monday and see it trade up into the whole fair value gap. We all have money to do that. The only issue with that is your lot size. If I put 3 lots here and that goes against me for 100 pips, that's $1,000. However, if I put half a lot size, that will be $500. If I keep doing that, I can get to a point where even this worst case scenario can be traded out safely. I did not expect it to do that, 600 pips. So I just wanted to see a setup on the pound dollar. I was happy to trade at anywhere around in this fair value gap on the 4 hour. So let's go on to the pound dollar now. Remember this gap. Pound dollar, we're going to get our replay. And this is the opposite of the dollar index, because they're a pair, and a strong dollar would mean that the pound is selling off. What did I like about this, and why did I trade it? Look at where we are. We are broken the previous daily low. What has let's do a little bit of price action, right? Because it's good practice. So let's go back to when the move started in this New York session on Tuesday, sorry. So we had a breakdown here. What did this take out? What did this wick take out? I'm hoping you've said it already. Sell side liquidity below here. Why? Can you see why? Let's see. Put that in. What do you expect on this area here on the sell side liquidity? We're expecting some fair value gaps, right? So let's see what we got. We have one fair value gap there, from that wick to that wick. Takes the top, and if you look at that, we don't actually need to put any more. That's the fair value gap that got targeted, and the actual bigger fair value gap was from that to that, which got hit when it broke down there. So we have the fair value gaps from here. Price went up, created equal lows. Look at this. Let's jump on this trend line there. From there to there, pretty much exact equal lows. What does price want to do when it finds equal lows? That's a draw to liquidity. So the price will come and take that out before it brings the price back up to where it was. So someone might say, you see this live, comes below here and it's got a break of structure. Now, if you might be trading that, if you saw that as a break of structure, where would you be getting in? You wouldn't be getting in on here, because you would need to price to come back into your fair value gap. And that fair value gap is here, if you're going short. And this is on the 15-minute. So we got hit. So you could have entered here going short if you're a multi-day trader. And you can see how nicely that's giving you another break of structure here, come back up, touches the top of the fair value gap there. So you have a fair value gap there to the pip, and continues lower and lower and lower. Now, if I want to long this, let's keep that in. If I want to long this, what do I need to see? I need to see a change of character, okay? A strong change of character. Look at this candle here. That's a strong candle on the downside. And let's label that something colorful so we can see it. Let's drag that and see, where is the first green candle that would indicate a change of structure? You can't see a lot there, right? Not much yet. And that's just by looking at the candles. So if we go and take out the replay, where did that candle come in? We had, it looks quite big on the 15-minute, so you can see how big that candle was. This here is probably the closest candle you can see on an upside move. So if you want to be extra safe and entries, just a quick guide of candles can show you the sentiment of volume. You don't need a volume chart underneath, because you can see it in these candles. So that's telling you that a lot of buyers came in at this point here. Where is it closest to the previous daily low? So let's take that out now. And let's go into where we traded this. Okay. Do I need to see those candles to go long? No, because like we've said, this is another tool that you can use to be able to get in trades if you're not sure when is the change of character coming in. This is not in the ICT mentorship. This is something that I think can help someone who's sees these breaks here and he's like, oh, is that a break? Is that a not break? Find a convincing candle. This is a convincing candle. These two are convincing candles. Two strong candles, one after the other. Okay? So you want to see that volume coming in. So we are on Friday and we started here. What did we see here to get in? I always trade on the 1 minute. Where did the break of structure come? So we had 7 o'clock, price went up and then created what we call a Judas move. You see how the London session, the kill zone opened until 10 o'clock. What happened to the price after the Asian market? Consolidated, push up, and then Judas moved down, created this here, and then continued all to the afternoon, till the New York session, and then distribution happened in the New York session. Did I hold that? Of course not. Where did I get in? I got in at 119203. So let's see that. 119203. Where was my worst position? 19436. Okay, so we have these lines now which indicate our price. Why did I get in here? Right? So we had, remember what we've seen on the dollar index. We've seen the gap. For the gap on the dollar index to fill, we need the pound to go higher. That's what's going to fill that gap. And it start doing this. I was watching the market from 6 o'clock. Start doing this from here. So I waited for a retracement of the price to go in. Let's see my separation of these. My first entry to my last entry was 22 pips. What's that in monetary value? So a pound, a pip will give you, and 20 pips will give you 220 pounds for this move that I had to sit in. So I kept getting positions. Like if we look at, I had that position, then I had a 411 was my other one, if we copy that. So you can see what I was doing here, and if you're an ICT trader, you can see what happened. We had the change of character taking out these highs here. What rests above here? Buy side liquidity. Buy side liquidity. What's the next target? These equal highs here. What rests above there? More buy side liquidity. Now, it went all the way up here. What did it do? It failed to take out these highs here. So what is that telling you here now? This failed to take it. Across here is our buy side liquidity. And as you can see, it got taken out again and came down before it pushed on the up. What you can very clearly see on the upside movement here is this fair value gap here. Okay, this is perfect ICT price action. Took out liquidity from the stops, indication that is coming lower, come back, retest that liquidity, pushes the break of structure. So if you're seeing that as a short, you're like, I'm going to get in here. If you're coming from down here, you can see that as a fulfillment of price in the fair value gap to the pip and continuation higher. I didn't trade that because I was already paid. And let's see, what did I do? This position was in and this position was in, and the price came down, broke structure. Now I am in management mode, right? Because this is going against me. So where would I consider to killing the trade and saying, I was wrong, I need to get out of this trade, it's not a trade that I want to be a part of? Look at where I am. I'm on the top here. I'm expecting this price to come down and fill the fair value gap, which it did. But sometimes I've noticed on the pound dollar especially, it fills the fair value gap and more to take out extra liquidity. So what I was waiting, anticipating for a price to go a bit further in this fair value gap. Now, if you are oversized, you might not be able to sit in this heat. For me, I always get this question, what's your stop, what's your risk reward? I risk around maximum $2,000 to $2,500, and I make roughly around $450 to $500, and maybe some better days. You might be thinking, so you're risking more to make less? No, that's incorrect. And that's why I don't like risk reward. What I'm doing is that is my buffer. I don't expect to lose. I don't go into a market to lose. And as we've seen on TradeSync, I don't have a losing day in February. And a lot of people say, you wait, that losing day is coming. And it will come. I'm not immune. Otherwise, I would just be a bank printing money. But when that day comes, I am happy to pay $2,000 to $2,500, which would be approximately, on the good weeks, 4 days of profits. Okay, so like this one. It will be 4 days of profit, will be around $2,100 or odd dollars. So if that happens, I would have to take the loss. It would mean that my analysis has been very off. It would mean that the price has moved ridiculous amounts. Normally we expect around 43 pips to, let's say, 150. I can easily manage that. If it does 200 pips in a London Open, maybe that might be a position where I would have been taken out. So that being said, for the stops and the risk, as you can see, the price came down. We're going to go back into the 1 minute and we're going to see, where did I enter? We had this price action, came down, and this was my third position. Now, what do I want to do? I want to take out these. So this, if you're wondering how much I had to sit in heat, that is 20 pips. So $200 plus $200, $400 I had to deal with coming down. Now, if that kept going down, obviously, that's when you reassess, because we've targeted this fair value gap and it's continuing on the lower side. But the price consolidated and it gave me opportunities to get in. And we're going to see that here. Price consolidated, broke higher. Okay. Came back, down, took out the liquidity below this, which is your sell side liquidity. This is intermediate sell side liquidity because we're on the 1 minute. These get taken out very regularly. Then came up, failed to break the high of here, came back down. Where is the real break? Do you see it? Breaks higher, comes down, and breaks higher again. Bigger volume coming in. Now this area here has filled a fair value gap for the short side. This is where this area here is super interesting for me. Why? Because we have a fair value gap here on the 50-minute and a fair value gap here. Now I didn't get into that one. I get in a perfect price. So I got in at the low of the, actually to the pip of that fair value gap. I don't always do this. I don't get it to the perfect entry. This would be potentially, if I was really convinced of this move, even if it failed to break the highs, I would have seen this consolidated. Technically with ICT, you shouldn't enter at this point, but I might have entered. But the perfect scenario to enter this move is here. Takes out liquidity, fills this fair value gap, pushes down. Comes back up, fills this fair value gap, comes down, and takes the liquidity out of these fair value gaps. So people that want to get long, like me, got the opportunity to get a better price from up here. Price continued, came down, failed to break these lows now. Now we don't want to see a break below here. So if you like tight stops, this area is why this area, right? So you can be conservative and you can take it down to this low here. In terms of stop, that would be 6 pips. If you think 6 pips is a lot, which will be $60 for me, you can go below this swing here, which would have been even less. You would have to deal with 2.6 pips. So ICT concept, this is your perfect entry. Comes back up, never breaks the low, comes back down. You see that? Even when it came back to retest, it didn't break that low of this fair value gap. Gives another opportunity for long, and off it went all the way up. And price action wise, you can see here, fair value gap, filled, comes up, comes back into this fair value gap, filled. Now we're at the previous daily low. Retouches up. Look at these fair value gaps, 1 and 2. Get filled, stays above the previous high, low, all the way up. And now you have these fair value gaps. Combination of them. Touches, reprices, once higher. Now, are these fair value gaps going to fill? This move here, it normally does, but when will it do that? Will it come back down to fill those fair value gaps on Monday? Well, we have to wait and see. Or is it going to touch equilibrium and push even higher? That's how I traded on Friday on the pound dollar to make 422.50. Like we said, what we were looking for is that gap. And actually, if you stayed this long, I just wanted to show you what happened on the dollar index and that gap. As we can see, I've hidden the right side of the graph just to show you. When we opened the chart at 6 o'clock, we saw this gap up, pushing up, and we said about the 4-hour fair value gap. We anticipated the price to come down, and the reason was to fill this fair value gap on the 5-minute and 15-minute. That gave me an indication to look for pound dollar longs. And as you can see, we had the Judas move, pushed up, and then came back down, filled that fair value gap. Okay, and it continued lower, down to equilibrium. So there you have it. That is a breakdown of how I enter, manage my trade, and exit. I hope you like these videos. Make sure you like that button, press the like button. We also like that like button, and also subscribe to the channel, because I will be posting these every day of the week. Hopefully you find it interesting as much as I do. This has given me the opportunity to come and move to Bali, because we can trade from home. And I'm quite lucky because I'm used to the London Open, so it's a good time for me to trade. I am going to miss the New York Open, but who knows? If I haven't seen any opportunity in the London Open, and we are deep into the New York session, and my kid is sleeping, and I've got an opportunity to go in, might be something to trial out. Or even the Asian market, which moves a little bit smoother. We need to look at that and see how that goes. So I hope you've enjoyed this video, and I'll catch you Monday, which the video will be posted obviously on Tuesday. So see you Tuesday.
I can't take no loss.